I'm now joined in the studio by Mediobanca's Christopher Wheeler. Thank you so much for coming in. Christopher, there is a lot of, actually, we have this exclusive saying that the government may sell to make up for, of course, the austerity measures and the easing off that they did on some of the taxes yesterday. But really, does it make sense for the government to sell if they don't get at least the money back that they invested in?
Well, clearly, we know the government's going to sell the stakes. They're not in the business of owning banks. But it's going to be very much a matter of market timing, and obviously they're going to want to sell at the most, the highest price they can possibly get.
And so what, the secret or the timing will be for sure after the banking commission?
That's certainly going to be the case, because that's the big unknown overhanging the whole of the UK bank sector, not just the state-owned banks. And we want to see exactly what's coming out of that on the 11th of April to get an initial view on it.
How concerned are you about the banking sector in general? Today we speak about Portugal, about Spain, about the fact that we have an EU solution, but we still hold so much of the others banks and the periphery banks. And here in the UK, they still own a lot of Irish debt.
Well, yes. I mean, our house view is that we have a negative view on the bank sector, have done for a couple of months now, very much on the back of all the concerns that are still floating around the sovereign debt markets, around the continued need for recapitalisation of the bank sector. That's just not gone away. And
this is what across the board for Ireland, Spain, Portugal. Is there anyone that seems to be that little bit stronger in terms of the banking sector?
Well, that's a really difficult one. I mean, a lot of the investment banking businesses have obviously recapitalised. We've seen the US banks, of course, recapitalised. We saw the news from the Fed last week on that. But a lot of the retail banks across the rest of Europe still have issues, if also they're going to be able to fuel the growth which is needed to get the economies back moving again.
But what about UK banks, for example, compared to some of the other European banks?
I mean, I think if we looked, we ran a simulation of the stress test that's coming up shortly, and I think we felt that the UK and French banks were possibly the best positioned going into that stress test. So I don't think we have to say they need more capital at the moment, but clearly they have to deal with a whole bunch of other issues, particularly in the domestic economy, which are obviously headwinds to their earnings growth. What
about the Spanish banks? We had Moody's today cut their credit rating on 30 banks, except for the largest 3. Again, they're so linked to actually real estate that do they look weaker than the Portuguese banks?
I wouldn't say they look weaker than the Portuguese banks, given obviously the state of the Portuguese economy as a whole. But clearly they've been hard hit, and obviously we're going through a massive restructuring in Spain at the moment. The savings banks are all being merged, and the very fact that that's going on at the moment, tells you there's a weakness in the sector that the government wants to actually address. The big banks, as you know, the Santander and BBVA and Caixa, have not been downgraded today. Much broader business mix.
They haven't been downgraded, but the stocks are down because they own so much of the Portuguese banks.
You're right. I mean, the interesting issue here is it's a sentiment issue. I mean, most of the banks don't have to mark down any movements in the sovereign debt because they've got it in their banking books. They're holding it to maturity rather than being in their trading books. So again, it's sentiment rather than something that at the moment, and I say at the moment, is going to directly impact earnings.
Christopher, when are you going to change your view on banks in general? A lot of economists I speak to say, look, we're kind of bumbling along, but the stress tests a lot of the times are not credible. We're not really taking the haircuts that we need to. We need a thorough restructuring of Europe's banks before we can move on.
I think that's far too dramatic. I think we've been through a massive restructuring of the European bank sector. What we need to make sure these banks are adequately capitalised to deal not just with their existing business, but future business. They can grow their balance sheets to fund economic growth. When we see the capitulation of banks and actually we see the raising of capital across the board, then I think people will say we're where we need to be.
Yeah, Christopher, thank you. Christopher Wheeler there.
Pleasure.